Peter Eliades with you, Stock Market Cycles update for Thursday, March 19th. This stuff is beginning to take a lot of my time away, folks, and it's pretty exciting, but very time-consuming. Some of you may have noticed that I tried to experiment today to do a live feed. Wouldn't that have been great? For those of you that are traders out there, do a live feed so you could see my short-term projections on these 27-minute charts. I played around with that, and I got to the point where I could get myself on screen, but I couldn't get both myself and the screen itself on the YouTube video screen live. We're talking about live, maybe a very slight delay, but basically live. So I tried to do that, and I was not successful at it. So you may have watched that at some point. You may have been notified, in fact, that there was something that went online. It wasn't really. It was just an experiment. Anyway, a couple of important points to be made here. Number one, this trading index, arms index thing has me very perplexed. It really does. I mean, the last 9 days, the Dow is down 22.3%. On 7 of those 9 days, we've had a single day trend that was below 1. That's remarkable. I don't know how to explain that. I mean, the real way to explain it is that there's no capitulation. People are buying the dips, buy the dip, buy the dips. And that's pretty frightening if that's what's going on. You know, for me, the trend used to be my favorite technical indicator of all. We're going back 20, 30 years now. But it's changed over time. Its personality has changed, and it's not as reliable as it once was. That's not to say that it's not useful. It's just that I don't rely on it as heavily as I used to. But in terms of sentiment here, that is remarkable. 7 of 9 days as the Dow went down 22% in a 9-day period. The single-day trend, 7 of the 9 days, was below 1. And the other 2 days they weren't huge readings above 2, 3, or 4. They were, the high ones, 169, I think one of them was, and whatever. So that's the first comment I want to make. And I make them in association with what I'm going to show you here. I showed you yesterday the suggestion that we might get a rally today, and indeed, you can see the Dow was up 188 points, S&P cash up 11 points. Is it going to be another one-day wonder? Well, I don't know. As you can also see, the futures are down 39 points overnight so far. This is, we're recording this at 7:04 p.m. Pacific, 10:04 p.m. Eastern Time. It'll be going online within the next 15 or 20 minutes. But that's what the futures are doing so far. But these are the important charts right here. I've never seen as great a divergence between the Dow and the S&P charts and the NDX chart, which is what we're looking at now. This is a confirmed projection on NDX to between 53.8285 and 61.6697. And in order to invalidate this projection, you've got to get all the way up here. You're talking about 10 or 12% to the upside. You got to get up above this red line and close there for more than 1 or 2 days. Then you've invalidated this downside. That's a huge rally. Now, we've had a very volatile market, and 10% move is not unheard of over the last couple of weeks. But that's what you have to get in order to invalidate this very significantly lower downside projection. Let's take a look at the next longer. That was a nominal 40-week projection, so those offsets were 96.8 to 110.6. This one, somewhat similar picture. These offsets are 189 to 194. Those are 39-week offsets, the equivalent of them on a daily chart. And look at these projections on the NDX: 4805.82, 5308.97. Now this one would be a little easier to overcome. You have to get up to, the next week or so up to the 77, 30, 40 area. That's about a 5, 6, 7% advance. So as again, with the kind of volatility we've been seeing, not unheard of. So, and then the very last one, the nominal 4-year projection, if either one of those two projections we just looked at is approached or met, you've got even significantly lower projections to be given because you would cross below both these lines. So if you're worried about the market, you have a right to be. These very, very low projections, this 4-year one has not been given yet, but the other ones have been given and confirmed. And the only way to get rid of them is to invalidate them. So at this point, I don't know what the odds are. I'd say at least 65-70% that they're going to be reached. Obviously, if we get above those offset lines again, that changes the odds significantly. So this is what I wanted to show you. The market is by no means out of the woods yet. There's still an excuse for it to attempt a further rally here, but the pressure is really to the downside until we see some capitulation, I believe, in the trading index numbers, unless they're lying to us for some reason. And I don't know why they would be. It's simply up and down volume measured against up and down stocks. That's it for now. Again, I'm Peter Eliades. This is Stock Market Cycles. Our software is we're really, really close now. We're negotiating. Anyway, it's getting exciting. So we'll tell you more about it hopefully next week. Haven't subscribed yet, do so. Bottom right of the screen. And if we do one of these crazy, try to do a live update or something, you'll get a chance. You'll be notified that we've done it. I won't promise you we're going to do anything like that, but that's a possibility. And if you do subscribe, click on the notification bell. That will notify you once you give your email address that there is a new update online. Thanks for watching.